Everybody, morning. Let's see what we got here. Chat stuck. Cool. Good morning, all. I'm not sure what David said above Larry, but hey, happy Friday. Welcome, everybody. And, we got Sergio, Diane, Darab, Donald, Diane, Cliff, Terry, Mark, Will, Aki, Gary, Ted, Arturo, Don, and regular subscribers like Jan. J Will, don't recognize your name, but welcome. Catherine, Larry, Jim, and, well, so it's August 2025, and our beloved government, they promised they'd cut spending faster than a Black Friday shopper cuts through a crowd, but they just posted a $345 billion 1 month deficit. Not a typo, not a misspeak, not a misquote. $345 billion with a B in one single month. It's kind of like buying a Tesla for every single person in Wyoming twice, and then throwing in a couple yachts for good measure. Now, I know what you're thinking. Wait. Didn't we have all those shiny new tariffs bring in all that money and offsetting all these deficits? Oh, we did. We did. We brought in a whopping $29.5 billion worth of tariffs, but we still overspent that by $345 billion. And you know what our government did? They spent it all. They spent the tariffs. They spent the extra. I mean, they spent it all. It's faster than a teenager with a credit card at the mall for the first time. It's kind of like finding a $20 bill on the sidewalk and immediately buying a Ferrari. I mean, talk about poor fiscal management. And this is right at the end of the fiscal year for the United States. So here's where the story gets really juicy. When this is kind of where your investment radar should start beeping like a smoke detector with a dying battery, keep you up all night. Our government spent $689 billion in August alone. That's up from last year, despite all the Doge promises and Elon Musk's cost-cutting crusades. And speaking of Elon, he's pretty much thrown in the towel because basically the government is unfixable. When the guy who thinks he can colonize Mars gives up fixing Washington, well, we're screwed. That's the bottom line. So here's the kicker that should make everybody's ears perk up. Now that we're spending $111.5 billion per month on just interest payments, let's think about that for a second. That's more than we spend on defense, more than we spend on education, more than we spend on pretty much everything out there except Social Security. We're literally paying more to service our debt than we are to defend the good faith and credit of the United States. That's like having a mortgage payment so high that you can't afford to buy food. But instead of downsizing, you just go buy a second house. That's smart, right? Now, as investors, we need to ask ourselves, what does this fiscal train wreck mean for our portfolios? Because while Washington is busy playing financial Jenga with trillion-dollar blocks, there's some serious opportunities potentially hiding in this chaos. First up, well, we've seen gold just keep rocking. Keep rocking. It's already up 39% this year, sitting at right around 36.50 or so per ounce. And some analysts are calling for 4,000, which isn't a stretch at this point. I mean, that's, 10% higher? And then 5,000 potentially next year, if this train keeps going. Because when governments start printing money, like it's going out of style, and trust me, they are, gold becomes the ultimate I trust you type investment. And it's kind of the fiscal equivalent of keeping cash under your mattress, except potentially holds value. Now, I know a lot of people don't want to do physical and protect it and hold it and store it, and it's a lot of effort, but that's probably the best way to go about this. Find yourself a good, reasonable gold broker in your local community and stack those gold coins. Now, This is where it gets interesting for a contrarian investor, maybe such as myself, because I tend to not go with the crowd. While everybody's panicking about deficits, somebody's got to build all those weapons and defense systems that our government keeps buying and mailing to other countries. Defense contractors like Lockheed Martin, RTX, Boeing, they sit in the sweet spot, and government might be broke, but they're not going to stop spending on defense. There's other stuff like Palantir and other up-and-coming defense tech, not so known. And, I mean, if anything, they're going to spend more. They're going to buy more weapons. It's kind of like buying from the only pizza place open during college finals. You're going to make money whether students can afford it or not. And let's talk about treasury bonds for a hot moment here. The 10-year dancing around 4%. And guess what? It's probably going higher, even if we get a rate cut next week. Why? Because when you're borrowing $1 trillion every 100 days, and it's starting to get faster than that, eventually the people lending you money are going to ask for better interest rates. It's kind of basic economics right there. When you're at terrible credit risk, you pay more to borrow. I mean, that's why we all have a credit score. The U.S. government is quickly becoming the financial equivalent of that friend who forgets their wallet at dinner. And, well, if you want to lend them money, you charge them a higher rate. Now, here's kind of the whole fun thing about this circus. We're spending 23% of every tax dollar just on interest payments. So every dollar that gets collected in taxes for old Uncle Sam, 23 cents of that goes to just paying interest. I mean, that's like spending almost a quarter of your paycheck just on the credit card minimum payments. And it's only getting worse because we're adding $1 trillion of debt every 100 days. At this rate, we're going to reach the point where every single tax dollar goes to paying interest, and the government is going to have to borrow money just to turn the lights on. That's a debt spiral. That's out of control. I mean, we're already getting there. We're already at the tipping point. So what's an investor do? Yeah, you diversify into this chaos, my friends. Gold still for the debasement play. Defense stocks. We're actually talking about actual weapon creator stocks because the government's always going to buy guns. And maybe some international exposure because the dollar is going to have some rough days. And if you're really feeling adventurous, maybe some inflation-protected bonds, because when the government finally admits they can't pay their debt with real money, they're going to have to pay them with funny money, and we're going to have to create some sort of craziness. The bottom line is this. Right now, we're witnessing and watching the greatest fiscal experiment in human history unfold with the world reserve currency. Might this be the very undoing? The U.S. government has already essentially decided the math is optional. We don't have to pay it. We just ignore it. And the debt doesn't matter until it comes ripping back and does matter. Right now, everybody's arrogant, assuming that we're the world reserve currency and we do whatever the F we want. Whatever the fudge we want. And while it doesn't really matter, but it will. The investor who positioned themselves to take advantage is the one laughing all the way to the bank. But maybe your bank no longer has US dollars that they can give you. So buckle up, Buttercup, because this ride is just getting started. We're going to keep the crazy train flowing. That's the debt update for the day. Hopefully that helped. Hopefully it was interesting, entertaining. You can let me know in the comments, in the chat. All trading involves a substantial risk of loss, though. I make predictions. Sometimes they come true. Sometimes they don't. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you trade them, you might lose money, especially if you don't know what you're doing. You should always paper trade until you can prove it. Then start small, the smallest increment you can trade. Prove you can make money a week. It's not a race. If you feel like you're trying to keep, you're like, I can't trade a size of 1. Like, that's not going to make any impact. You're missing the point. You're missing the complete point. If you can't trade a size of 1 and make money consistently, how would you ever expect to try to trade a full size position and keep making money? Can't do it. Can't do it. You should always be trading size that doesn't matter. Doesn't matter if you lose it all. Now, if you need somebody to tell you what to do, what buttons to push, hire and consult a financial advisor, because that's not what I do. I'm just a guy that makes some money in the markets, share a little bit, just in case you hadn't seen the updates here. Year to date, $25,000. And I love how somebody always sends me a message right during my show. And let's see. Let's pull this up. Look at the profit. We started here tax day, essentially, with this account. And no money up until tax day. Started trading at tax day. And boom, up $25,000. Do you know how to make money in the markets? I can do it pretty consistently. There's no losses in it. I mean, there's no big drawdowns, right? There are some losses. There's just no big drawdowns. Losses are very small. Really, I just rolled that one forward. I'll book that profit out in the coming days. I'll get that money back. That one right there went into that right there. And then that went on to another one for today. Interesting stuff. So, also interesting, look at this. I'm ranked number 180 out of the thousands of people on KInfo for the last year. I'm in the top 180, and I don't even have a big account. Not really. I'm sure the people, and I've only got 4 months. Like, I'm competing with all people that have been trading for a year. It's just wild. This game is hard. That's the point I'm trying to make. This game is hard. If you can turn a profit, you can be in the top traders in the world. That's crazy. So if you sit there and you're like, well, I can't book small profits because I can't take small trades because it doesn't make a difference in my account. Guess what? Most people lose money at this. Most people lose money at this. You should really evaluate what you're doing. That was an awesome trade. I'm done with it for now. That was the target. Watch out. Probably coming back. If anybody was in that baby. S&P. Well, guess what? That's crazy town. Where's the next target? All the way up here, 7,100. If we do that, it will be above 7 before we go below 4. If we just shoot up there. Do I think we're doing that? Not really. Highly likely we do this before we do something like this. And this will be, probably have some bounces along the way. We could come back and retest the breakouts. It's entirely possible. Keep these things in mind here. Like, we commonly see a retest of the breakouts. That would be where the roadmap line would probably come up on the daily. We haven't been back to that daily roadmap line in a good little while. We crossed it in May. And look back here. Crossed it in August 24. Came back to hit it March 25. Markets open. Crossed it in November. Came back to hit it in August. So December plus 8 months through August. That's 9 months right there. August, September, October, November, December, January, February, March. That's 7 months. So every 7 to 9 months, we usually come back and visit, sometimes even faster. This one, June, July, August, September. We got 4 months. October, November, December. That's a 7 months. January, February, 9 months. So somewhere coming up over here, we're eventually going to come back down and retest. At least there. It's just the reality of the situation. Now we went up. This was one of the fastest, biggest moves up in history. When this finally corrects, it's probably going to do another violent flush out. It's one of the most violent flush downs outside of COVID. COVID was just up straight off the cliff. Be careful out there, everybody. I mean, this is starting to look a little bit like, look at that move right there. This is deja vu to me of that. We don't have this little volatility in here yet. If we do that, it'd be like a COVID repeat right there. Now, the market pretty much expects the Fed's going to cut next week. 87, we're almost 90% locked in on a quarter point. Should be interesting. Should be interesting. So, can we push all the way up here without looking back? Yeah, anything's possible. Is it very likely? Not really. Very low probability we're going to just rip another 600 points higher. Low probability. Can it happen? Sure. Anything's possible. The market can be completely insane and rational. Now, before the market opened this morning, I sold a 6,300 put on S&P, on ES right here. Before I came live, I sold this, collected a few bucks. Right there on the futures, 6,300. Because that's almost 300 points down to get to me. Didn't think we'd do it. It's like I think that'll be the 8th or 9th one in a row I've done. NQ still has more upside. This is the one probably driving the train right here. Still haven't hit that 24.4. When we get there, that might be the end of this rally. So you want to know the one to watch? There it is. You'd be like, well, why are you watching futures when the NASDAQ index is already there? That's a little bit of difference, right? NASDAQ index already there. NASDAQ futures still shy. Usually when everything comes into alignment is when the market reacts. Now, the other one to watch, Russell. We still got room to go. 2,600, still that upside potential. Still another 200 points. That's a bunch of points for Russell. 10% higher, roughly. Oil, coming back up today, is below this long-term support zone. Annoying that it keeps removing that update. This May 2023 low, set up coming a support zone. It was kind of a floor, but right now we're pushing below it. It opens up the door for a deeper flush. If we get down in the the low 50s, even 250. If we get down there, might open a hot war in the Middle East again. They started shooting missiles when we did this. Made oil go up. Now that we're drifting back down, if we get back down here, they're going to start shooting missiles again. Just keep aware. Gold right here, still pushing all-time highs. Might go for that 3,700. That's what I've kind of talked about. There's the target. Might hit it and then reject it. Bitcoin still on the path. Starting out a little red today, but still on the path. Here's the target. Next stop, right up in here. Now we are in the danger zone for this being a three-wave corrective. If this is not a 1, 2, 3, and this is just an A, B, C, we are in that zone. If we start back down, really, it'll be somewhere like 113.5, roughly. We start back down through this little red zone here. We crush it back down through that. We're probably going lower low than we had coming into September. This low right here, wrapping up August, we're probably going lower low than that. That's your levels to watch. We get below that, probably coming below that. All right. There you go. For today, question mark. I have no idea what that means. Ethereum pushing out of the consolidation. First resistance is right here. Next resistance is right there. Do you have a service based on your orange market roadmap? Everything's based on the market roadmap. Paliseed. Everything I do. Which one should I buy? I don't know. I mean, that's everything I do is based on that. That's why it's on every. That's why it's the only indicator really on any chart. All these alerts keep popping off are based on it. NKD pushing out. We did find the resistance very quickly. Look at that. There's the pullback. There's the advance. Boom. Right to the first target. We may see a retest of that breakout. And then continuation higher. Still expecting bigger picture for this to get continuation up to somewhere in the neighborhood of 48 to 50,000 at a minimum. Maybe on a little spicier on up in here. More ideal around 53, 54,000. Indication of global liquidity. We did this big correction, A, B, C. Now that we're done, the expansion takes us on up there. We didn't break down, thank goodness. So probably going to push on out. That'll drive indexes, ES, NQ, Bitcoin, Ethereum. Drive all these risk-on assets higher with it. Right there. Dollar. Yeah, today's the expiration for the ES put. I got paid like, I'm gonna say 0.2 points, so like $10. Tied up like $5,000 for that 1 day trade. Coming down here, if we hold that zone right there, potential to go higher. Retest the roadmap line. If we push on through, downside. It's one of those 0-day plays, Jody. I keep posting. I didn't post it yet, but in the Termite Trading Lab group, I will after I'm done here. So that's the zone I'm looking for. If we find support there, coming up to the roadmap line next. If we don't hold support there, we're going to retest this trend line. more than likely. More than likely. See if it'll stick. Apple. So supports here, resistance here, and then here. So if you're bullish on Apple, watch for the 245 and 260. If you're bearish on Apple, watch for support right down here, 220. If we get through 220, potential to come all the way down, make a lower low. Then that right there. Watch for the 618 level in here, roughly around 200. For supports, Amazon. We haven't filled the gap yet. Get a gap down there. Bang the head on, retrace, bang the head on. Probably going to retrace again. If we hold the higher low, eventually we're probably going to break out. If we pull back, hold a higher low, may set us up for 260 on the upside. Google keeps pushing out. It's probably going to run on up to 263. Now, it doesn't mean it won't do this to get there, but it's probably going to 263. Time frame, I don't know. Target 263. Meta, if you didn't get in, I'd wait for a pullback before I jumped in, but you might just miss it. So no fear of missing out, all right? Meta coming back to retest the breakout again. This is not the most bullish thing. If we get below that low we had coming into September right here, this little guy right here, get below that, we're coming down to test the roadmap line. If that doesn't hold support, watch out for a bigger retrace. We could come all the way back down. This could be a first move down, a retrace, and a next move down. Even though we exceeded the start point, that doesn't matter. Doesn't matter. It's going to all be just a giant correction. Microsoft still holding in here with the 1.1448. If that was it and we start breaking higher again, look for that 565 target. We came up shy right there. Got close, but just a little bit shy. Now, if we don't hold that, probably come on down, test this area. So this is support right here, 465. That's resistance up there, 565. For Microsoft, NVIDIA, back up in the churn. If we can push it on out, look for this 20% higher up here at 212. And just insane numbers there. $40 higher, basically $24.4 billion per dollar higher. Times 20. It's $480 billion, basically. Almost $500 billion. $500 billion to do that move right there. It's like more than all the deficit of the United States right there in 1 month. Crazy. Tesla, look at her go. On the path now. Pushed above. That's what we needed. Talked about that being resistance. Now it's game on. We might stop at some of these fib lines, but 450 is my target. That's the target. 500 above that. Netflix, look at that. Rejection of the 618 yesterday. Grinding a little bit here, but there's our target. Probably get continuation. May find a little bit of support right here. And Kane and I talked about there's a big gamma level right here at 1180 yesterday, where there's a lot of options positioned. So we may see a little bit of intermediate supports, but then ultimately come on down in this 1100 to maybe 1,000 level down here. All right, so I go pull I run a tool and go pull everything moving $2 or more up in the pre-market, put it on the gainers list, $2 or more down on the pre-market decliners list. I have an algo that runs after the market closes and finds all the market roadmap bounce setups that are valid for today on about 4,000 stocks, and that list is down here. We'll check those out here in a few minutes. Let's dive through, check out anything, see if anything's moving. We've got Adobe announcing earnings, good earnings, positive reaction in the pre-market, and then as the market opens, we're going to push this down toward the target on the downside. I wouldn't touch that. Nope. Nope, nope, nope. So much nope. IBEX, well, it looks like it's getting up into a target. I wouldn't have traded this either. Big sideways nasty. Yeah, we're at the 1272, 1618, up at 5690. Duolingo, potential to have bottomed, and that's looking like that is going to be the bottom with that reaction off of that bottom. The next expansion for Duolingo up here around 600 to 700. It's a double from where we are. If you got the cash for it, that may be good. ETHU keeps consolidating in here. We got a major resistance coming up at 245. SNPS. Wow. Yeah, so this is probably all part of the same correction. Yeah, this is back to when I talked about a correction can go higher than the start point. This is probably all part of the same correction. First move down, the retrace, 1, 2, 3. Ideal point for it to be. You know, this is what I call an A wave down, Elliott wave speak. Absolutely a B wave up, beautiful. And then C wave, probably going to go lower than that A. Correction, absolutely beautiful correction. It's just a pattern, shows up in the market over and over. That's 1, 2, 3, 4. Probably consolidate just a little bit here and then make a finality move for the 5. It's not magic. It's just math and human psychology that nobody wants to acknowledge. Solana pushing out. I like it. I like it. I like it. We need this to come on up to 85 on SOLN. You probably retrace, hold above, and then make the finality move. That finality move probably, I'm just guessing where we might retrace to, but finality move maybe to 100. So we need this to come on up to here, retrace back down in here, then make that final move up here. GCTK, Gluco Truck. Reverse splits. Danger, 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 danger. Don't trade this. Burn it in a dumpster fire. Baidu, look at that thing go. This thing may pay out. Let's go. Yes, sir. Let's go. Oh, yeah. Come on. Beautiful. MU keeps climbing too. We're going for the target. This was frustrating, but here we go. Going for the target. That one keeps showing up. Wouldn't touch it. Another dumpster fire with reverse split. When a company does a reverse split to stay listed, their management is saying we are bad at managing stock price. And this is probably just some crazy crap, and then eventually probably coming back down. There are more instances where this will come back down to close to zero than there are instances where this helped the company turn around. Usually they end up going bankrupt eventually. That's just It's like 99% of the time when a company does a reverse split, they eventually end up going out of business in the coming years ahead. Some people are really great at holding on. It's like your friend that never has a job and seems to always be able to make, not get evicted and all that stuff. We all know that guy. Seems like we've heard of him or we see him on TV or whatever. There's always that person out there. And some of those companies can just hold on forever, but 99% of them that do a reverse split end up going bankrupt. There's a major resistance here on Coinbase. That could be a 1, 2, 3 wave up. And then we see this finality move. Like, kind of scaring me a little bit that Bitcoin may do another flush that would fit with Coinbase hitting the roadmap line finally. Reddit coming up, finally getting close to that target, 269, 308 above that if we can do it. Bulls, 229, SMCI. Be careful here. This has a date with $10. Sometime it's going to break down and come down here. How long? I don't know. This is one that just keeps hanging on, but it's got this pattern. Probably coming down to $10. And this was a bubble pattern. Could come down even lower into the low single digits. Be careful. If you've never seen a bubble pattern, this is it. You had people talking about SMCI. Got to tell everybody to buy more. We saw flight attendants, gutter installers, window people, plumbers. I had people talking to me about SMCI that didn't even know I was a stock trader. Everybody's a genius. We're all going to be rich. And guess what? I don't hear anybody talking about SMCI and how it's changing the world anymore. We might get that capitulation where things aren't so good. So be careful out there. SOLT, 2x on Solana. If you think Solana's rocking, don't come a knocking. JobX, 2x long on Joby. This has been out for all of 4 days and craziness. Joby hadn't even moved, so Joby looks like it's going to finish retracing to the roadmap line. That put the 2x down a little bit. If we get there, that might be opportunity to go long again. I'd be careful on that, as usual. At 90% of the stuff I talk about is no opportunity for me. Maybe 99. I mean, you want to know what I'm trading? Here you go. Like this is stuff I'm trading. I only pick 5 or 6. Korea. Oh, look at that go. We consolidated the bottom now. We're going again. Got more resistance coming up at the top of the box. This does have a reverse split, but it's not a company. All right. ETFs doing reverse splits, not the same as companies doing reverse splits. Not the same game. Not the same at all. NBIS breaking out. If this can get to 163, we might see that would be a move up, a retrace, a wave. That'd be a 1, 2, 3. Probably see a 4, and then a 5 somewhere up in the 300 area maybe. We'll copy whatever the size of. We'll copy that move from wherever we retrace to here, and do that final move up here. Leverage, 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 leverage. PMNR, Bitminer. That thing looks like it needs that to me. Mo, another 2x long. Wow, there's a lot of these 2x leverage things. There's gonna be a day of reckoning, I feel like, when this is like the hot fad in the market right now. Adding all these 2x leverage tickers to everything in the S&P. Eventually, the piper is gonna come around and devastate a bunch of them. I feel like it's kind of like when froyo shops were opening everywhere, and then all of a sudden I don't know where a single one is. They're all out of business. So Alaska Airlines, if we can break out above that, up there, and kind of popped up, went below. We didn't really hold support, but we're popping out again. We may have to come back and test again, see if we can hold. COCP, that's Pharmaceutical. I just don't trade biotech pharma. It's the danger of losing all your money. Reverse split in here too. All right. Restoration Hardware. Look at that channel. This thing's still bullish on this. We're coming into the roadmap line, having trouble, struggling to get through. If we can pop through, look at that, rejected came up for the gap fill there, rejected it back down. If we can break out through it, could set it up for a return back to like 400. ABVX. Yeah. Not touching that. NVS. Again, not touching that. FEIM. Probably coming back to the roadmap line after that epic 272 run. It's just a rare move. This big bounce. That big run. Probably coming back. Set up the next run. AMAT. Well, here you go. A wave down, B wave retrace, held the 618. Very classic. ABC. It's probably going to come down here. Now it could hold. Possible. I have been a little bit bullish on this. At least I was for the B wave. Now, if we break down below this 140 area, likely we're coming down to 100. QCOM still going sideways. No breakout, no nothing. All right, stuff that was actually set up for a move today. That was an interesting one, despite, here's a real estate investment trust right here. Might be a good one. Has a 7% yield. It's a high yield. It's a double dip trade type play. Looking for that move up to 269. It is a little on the pricey side. BLKB. Here's the high, here's the low. 77 on the upside. ES. Not the futures. Here's the high, here's the low, and 68 on the upside. FLS. Here's the high, here's the low. Close above, 60, 78 targets. IHAK, IHAK. Here's the high, here's the low. Close above, looking for 54.78 on the target. KMI. Here's the high, here's the low. Picked up this high right there. That high, that low. Picked that up, 28 here. And if that plays out, then this will probably work up to 30, maybe. That was a big three-wave retrace, a little deeper. KYMR. There's the close above. Looking for 53 on the upside. ORRF. Orf. Closed above. Looking for 38.78. And WMB. Sloppy price action. But you can see last time that big pullback hit the target. Pulled back. ABC. Three-wave retrace. There's the high. There's the low. Didn't make it to that one yet. So it picked up the algorithm picked up that right there. Closed above 62, and if that works, then we're probably going on up here to 64. And that's the setups for today. Bias for the day is just caution. I think we could start, we may just hover. That's kind of, I think we just hover. We may grind slightly higher here. May get up to 6,000, I mean 6,600, 6,600. We may push up into that next week for FOMC. This is setting up for a retrace on FOMC. Be careful. Be careful, be careful, be careful. And buying gold stocks is not as smart as buying actual physical gold. That's true. True, true, true. True, 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 totally true. So be careful out there. I'll be on Market Masters 11:30. prosperitypub.com/marketmasters. If you want to come see me, throw the link in Discord. PRO. I don't have the link handy, but there. I think that's the link. prosperitypub.com/marketmasters. I'll be live 11:30 on Zoom with Jack Carter. We'll talk actual trades, what we're doing, how I'm making money. Talk about some of the trades I got open here. And we'll see you later. I'll be back on Monday. Same bat time, same bat channel. Have a great weekend, everybody, as David says. We'll see you later.